here at the New York Stock Exchange, we're here. I'm here, Olivia Bono-Voznenko. You're here. We have Stephen Guilfoyle here to tell us what's going on today. But before we get into that, Stephen, how are you doing?
Oh, I'm just enjoying life on this awful Thursday. Thank you.
Well, that's good and bad to hear. Stephen, I've been dying to ask you your perception of the Fed minutes yesterday. Can you make sense of it for us?
It doesn't really come as a surprise. I mean, obviously, some of the markets were shocked a little bit. The Fed funds rate futures market wasn't priced correctly, and neither were the DXY, stocks, or bonds, or gold, for that matter. But, I mean, if you look at what the Fed's been trying to tell us for the last 2 weeks, they sent out a batch of hawks. They pretty much got the DXY where they wanted, which is 95 or so. All the asset classes had to readjust to get where they are now. And now we have to move on knowing that there probably will be a rate hike, if not in June, but by July.
And assuming there is a rate hike in June or July, how should we be preparing for this?
Well, you have to be careful now. I think you probably want to stick to your plan. If you're picking stocks, you probably want to still pick the stocks you want, but maybe your point of entry is different, or maybe you're in a position where you have to buy a little more, or maybe protect yourself in the options market. You should always be doing that, by the way. Our home gamers should be protecting themselves in the options market because you're leaving yourself up to just too much risk without doing so.
Now, the Fed is obviously dominating the market action today, but we also have some more recent economic data like jobs figures and leading indicators. What's having more effect today?
Well, the macro that we've seen for a little while now has been slightly better. It's been less awful than what we've been used to, and that's what's giving the Fed this ability, this flexibility to do what they need to do. If they are owned by the banks, I don't know if everybody knows that, and if the banks do need an increase in the lowest interest rates, then they are giving the Fed the justification to do so. Take a look at the banking sector yesterday. During that awful sell-off, the banking subsector of the financial sector was up 3.8%. So obviously they're doing something at the behest of someone.
And Sarge, is there going to be any earnings that will offset the conditions today?
You know, we're almost at the end of earnings season. You'll still get a few retailers. I mean, you saw Walmart today. That was a nice one. You'll get Abercrombie and Fitch next week. But we're getting towards the end of earnings season. What you're going to want to watch is going to be the continued Fed speak. And next week, we get James Bullard of the St. Louis Fed twice. James Bullard, as we all know, is a headline maker, and he's a talker. And he kind of changes his mind all the time. So really anything can happen with this guy, and it's going to happen. You also get GDP next Friday.
So anything can happen. Hopefully the markets will pick back up. But I have to ask you, are you going to have more faith in the markets or in the Mets doing well this weekend?
Well, we're playing the Brewers this weekend, and at least there'll be hopefully a little bit of a break. So I probably have more faith in the Mets right now, but I never lose complete faith in the markets because there's always an opportunity somewhere in the marketplace. And the challenge of finding the opportunity and doing something correctly in accordance with that is what this sport is all about, because this really is a sport.
Well, from the market to baseball, you always know how to play it right. Thank you so much, Stephen.
Oh, thank you, Olivia.